What's up everyone, Dylan here. I wanted to hop on for another episode of the weekly analysis video. With that said, we'll hop right into it. The bulls have been doing a very good job in defending dips. Last week, I went over this October 10th lows and talked about how the bulls did a very nice job buying the dip, basically doing a double bottom at those lows. Since then, the pattern remains intact where the bulls have been defending dips very well. Right? I posted my last video last Monday night. So since then, the next day, the market came down and tested the previous Friday's high and held very well. On top of that, Nasdaq also came down to a key area of support and held as well. Right? You could see this was posted the morning after my video. I said Nasdaq 50% fib from last Thursday's high to Friday's low was used yesterday to gauge strength. It may retest there soon. Sits at 24,607. Ideally, the bulls want to see that the weaker index, aka the Nasdaq at the time, can hold there. So you can see, again, this was the day, the morning after I posted that previous video, that most recent video, and you can see Nasdaq did the exact same thing, pulled back Tuesday morning and held right where it was, supposed to. Okay, so you want to see this stair step approach where bulls continue to defend dips at key areas, continue if you are a bull. So that being said, these are the two areas that I am looking at going forward in the near term. This area here was previous resistance. So ideally, I would like to see that bulls are able to defend dips into that 67.91. If that does not hold, there is a decent level below that at 67.32. Right? You could see this was an area of previous resistance. Go to a 1 hour chart, right? You could see multiple tests here before the breakout occurred. Okay, so if 67.91 does not hold and the market continues to the downside, I would like to see the last resort at 67.29 hold. I would like to see that get defended by the bulls. Okay, so the market remains in a near-term uptrend until proven otherwise. So I would use 67.29 as the line in the sand. Ideally, I want to see this one get defended, but if it doesn't, 67.29 is the next best thing. So if the market continues to hold above 67.29, the bulls are in complete control in my eyes. Below that, I'd be a little bit more neutral, and then to the downside even more, the 100-day is the it's probably the most important line on here, and we are going to be using the SPX. So SPX 100-day moving average marked the most recent low, right, that we saw, last week. And if the market does get down there again, that would be the main area to the downside to gauge, right? A close below that on SPX would be a net negative for the market, and that would be, in my opinion, that would really flip the switch in my mind in terms of, risk on turning to risk off. Okay, so ideally for bulls, they want to stay bid above 67.29. Below that, I would be a little bit more neutral, and then up until SPX 100-day moving average, below that, I would flip the switch a little bit more to the bearish narrative. Okay, so there's a few things that are aligning with this potential pattern, right? First off, we have seasonality. This is Nasdaq flow of funds seasonality since 1985. So this kind of lines up exactly where we are, right? Where we have that recent rally, usually from December 4th-ish to December 7th. It goes sideways, followed by December 8th to about December 20th. You actually do see a downside move, okay? Again, I want to preface and say that seasonality charts this year have not been good, in plain English, okay? However, I still like to look at them, especially if it coincides with the analysis that I'm looking at, okay? So this kind of coincides with what I'm looking at, where if the market does want to take a breather for the next week or two before, making its next leg up, that would be a healthy price action, right? You could see if we go to the 4-hour chart, the RSI got into overbought territory on Friday. So this sideways movement is, allowing for the index to take a breather. Okay, so I wouldn't mind to see price come down here, right? May potentially get bought, potentially consolidate, even, even come down here and then bottom and then move to the upside, right? That would be healthy movement to give the index somewhat of a breather. Okay, so again, seasonality wise shows that from now until December 20th, you might have a flurry to the upside followed by either consolidation or slight movement to the downside. I would not rule that out. Okay. Another thing that is a net positive is that the breadth has been very, very solid, right? We've been talking about in recent months, the breadth has been very, very poor, where you have a little amount of stocks doing a lot of the heavy lifting for the overall market, where, in the S&P 500, you might have 15 stocks that are outperforming, whereas the other 485 stocks in the index are struggling, and you have, so little breadth, right? So narrow breadth that is doing the heavy lifting, which can be, it's not a good thing. Okay, that has changed its path, right? We've seen recently that breadth is improving. So market concentration is broadening more than narrowing. Okay, there have been a few mega cap stocks that have taken control, whereas Nvidia, which was doing a lot of the heavy lifting, has been pulling back. Right, over the last month, Nvidia has gone down 12.85%. However, in that same month time span, SPY is only down 0.7%. So despite Nvidia taking a breather and dropping 12%, the S&P and the Nasdaq have been doing a very, very good job sustaining value. Okay, part of the reason that is because a lot of the money rotation flows went into Google. Google has been picking up a lot of the slack, right? Another one is AVGO, right? Broadcom also picking up a lot of the slack. You can see Broadcom is up 2% on the month. Google is up 11% on the month. And then Apple made all-time highs today. It's also up 2% of the month. So those have been doing a very, very good job, not only catching up, but also they've been responsible for keeping the market afloat while the king, right, Nvidia, has been going down. So that's a net positive. Okay, and not even mega cap names have been strong. We've also seen that RSP is showing relative strength as well. RSP is the equal weighted S&P 500, as if the 11 sectors were equally weighted. You can see over the last month, this thing is up 1.6%, whereas the SPY is underperforming, right? The normal weighted SPY is down 0.7%, and QQQ is down 2.7%. So RSP, again, that is a clear sign that breadth is getting much more healthy and much more broader. That's a good thing for the overall market. Okay. Another thing that's a net positive is the gamma. Gamma recently went back into positive territory, right? We have rallied. This is from Goldman Sachs, Cullen Morgan. We have rallied back into a pocket of gamma. We think dealers are long $6.5 billion of gamma here, right? The 3-day increase is the second largest in the last 3 years. All else equal, we should see realized vol start to subside and liquidity improve. Okay, what does this mean? I've talked about this before, but very, very simply put, when you're in an environment of positive gamma, that implies that dealers will buy on pullbacks in the S&P and the Nasdaq, and dealers will sell on rallies. So it's a net positive because any pullback you have, you have supportive flows that are supporting that downside movement. Okay, so if the market does, does happen to turn over and go to the downside, being in a positive gamma environment will allow for some support to be had. Now, is it invincible? Is it the case where it's impossible for the S&P to continue to the downside in a positive gamma environment? No, but it's a net positive. Okay, so that's very, very important. Okay, going into a potential net negative is Bitcoin. Right, Bitcoin has been the talk of the town. Right, Bitcoin had a crappy day today. It was down over 5% today, and it kind of flirted to the point where a lot of people were thought that it was going to go back down to these November 21st lows. ETH, on the other hand, got much closer to those November 21st lows, but both, as of now, made a higher low. Okay, but this was in a very, very weak spot as of this morning. Okay, and something that I've been talking about recently over the last month, especially in the Discord, is usually, right, what we've been seeing especially is when Bitcoin goes down, it has a much larger correlation effect to the equity space, where in weak downtrending markets in Bitcoin or crypto in general, it usually has a spillover effect into the equity space, where those two things, right, crypto and say the Nasdaq, have a 0.7 ratio in terms of correlation, which is very, very high. Okay. However, today you didn't really see that. Despite Bitcoin being down 5% today, SPY closed, very, very, I mean, it was down on the day, but not by much, right? SPY closed down less than 0.5%, and same with QQQ, right? It closed down 34 basis points, which relative to a Bitcoin 5% drawdown, in plain English, is very, very minuscule, and you could argue that is very, very resilient. So that's a good thing. Okay, everyone and their mother is talking about MSTR. Okay, MSTR is getting a lot of crap talking in plain English, right? Where a lot of fear is there, right? So I'm going to get into that and talk about the price action in MSTR, right? Strategy, and give my thoughts. Okay, so essentially, in terms of Bitcoin, if those November 21st lows were to get broken, I would imagine that price is going to come down to this 75,000 area, right? This was previous resistance, which turned into support. That's the next area to the downside that I will be paying close attention to. If those November 21st lows get broken, I would imagine that spillover effect into the Nasdaq and the S&P, where some of the weakness gets brought into the equity space, where Bitcoin and Ethereum downside pressure cause the S&P and the Nasdaq to also come off as well. Okay, so I want to make sure that is clear. Okay, but on to MSTR. There was an interview done with Fang Lei, who's Strategy's chief executive officer. This was done on Friday. Okay, so very, very recently. Strategy's mNAV, which is a key valuation metric comparing the firm's enterprise value to the value of its Bitcoin holdings, sat at about 1.2 today, according to its website. So we're going to go over here and type in MSTR right here. Okay, so on strategy.com, you can see it shows you this this data point. Okay, it's the mNAV. So right now it's at 1.16. Okay, so you can see they have multiple of the Bitcoin reserve calculated by dividing enterprise value by the Bitcoin reserve. Okay, so that number is very, very important for this context. You could see this is verbatim what Fang Lei said in the interview. Quote unquote, "We can sell Bitcoin, and we would sell Bitcoin if we needed to to fund our dividend payments below 1x mNAV. So right now it's at 1.16. He's saying if that number got below 1.00, that MSTR would start to sell Bitcoin. Okay, so Fang Li said, noting that it would only be carried out as a last resort. And then he said, there's the mathematical side of me that says that would be absolutely the right thing to do. And there's the emotional side of me, the market side of me, that says we don't really want to be the company that's selling Bitcoin. Generally speaking, for me, the mathematical side wins. Okay, so a lot of people are talking about this, being that MSTR is the largest holder of Bitcoin. That is a fact. So if they start selling their Bitcoin holdings, guess what? It's probably going to drag down Bitcoin with it. Okay, so definitely keep an eye on that website. And from my understanding, it updates on a daily time frame. If that gets below 1, I'd be curious what the implications of the price action of Bitcoin will be. Okay, so Spot Gamma pointed out today, I saw it on Twitter, that there is a huge cluster of long puts in MSTR below 170. Okay, so let's talk about in terms of the fear and the fact that this isn't just fear in terms of, talking. This is shown by Spot Gamma, showing that there's actually a ton of money behind this, right? Where there's a bunch of long puts below 170. So people are betting against MSTR. They're betting that MSTR is going to go down, that they're going to go bankrupt, so on and so forth. So there's a level that I pointed out in the Discord today. I'm going to go to a 5-minute. I'm going to go to extended hours, right? This level here has been very, very strong support last week, right? From there, and then you could draw it down to here, okay? So from 166.80 to 166, right? I just kind of went in the middle and said 166.3 in the Discord. You could see this level tested again in pre-market today. Then when the market opened, it broke below, retested, and then from the retest down, in less than an hour, it dropped an additional 6%, which is a massive move in a short amount of time. Okay, so below that, I basically said if MSTR were to break below that key area of recent support, it could exacerbate the moves to the downside, which it did, but it ended up reversing, and it actually looks pretty freaking bullish now. Okay, so we go to a daily chart, and excuse me, I'm gonna take a sip of this 1 sec. Okay, so not only did it break below that area of support and recapture, it also printed a hammer candle. All right, you can see a nice hammer candle, which is a bullish candle, and it was done on very, very strong volume. All right, the volume today was over 40 million shares. The last time it traded over 40 million shares, you'd have to go all the way back to December of 2024. So this was the most amount of shares traded in a single day in this year, in year to date in 2025. Okay, usually when you have a ton of fear, when you have a ton of lopsided positioning, right, going back to that Spot Gamma, right, there's a lot of, right, cluster of long puts below 170, right, so you have lopsided positioning, you have a ton of fear, right, yet you get good action, right? My boss had said this to me years and years and years ago. He said there's two different things. There's bad news, good action, and then good news, bad action. In this case, it would be bad news, good action, where you have bad news that drives price lower, okay, right? And you have a lot of fear built up and panic built up, yet you actually get a good reaction and bullish reaction. Usually what that implies is it's probably at a near-term bottom. I'm not saying that this is going to be the actual bottom and it's going to, pop 100%. However, technically, because of the lopsided positioning, the ton of fear, the fact that it's showing, a capitulated bottom with heavy volume, hammer candle, good risk reward, so on and so forth, this is an area that I would be comfortable getting long, okay? And I'll put it at that, okay? So if MSTR does manage to bottom, right, what would that do? That would take a lot of the fear out of Bitcoin, because if MSTR doesn't have to start selling their Bitcoin, right, if that mNAV goes up, right, that will take away that pressure, that near-term pressure, which should, lead to inflows and better optimism coming back into the crypto space. Okay, so that is what I'm looking at, and what I'm saying gets invalidated if today's lows were to get breached. Okay, but as long as it stays above today's lows, I would be more a buyer than I would be a seller, and I think that the risk reward is pretty good down here. Okay, so that is it for me. Hopefully you guys like the video. If not, let me know. I always appreciate feedback. And with that said, I will talk to you soon. Peace.